Welcome back. Let's now give you a sense of how the world of business is looking like. The local index is expected to open to mixed global markets after Wall Street's three major indicators edged higher after a big sell-off over the past 2 days. The markets are still reeling from U.S. inflation data coming in hotter than expected, triggering the sell-off. Makwe Masilela, who's Chief Investment Officer and founder at Makwe Fund Managers, joins us now for some analysis. Makwe, very good morning to you. Thank you for your time. Give us an overview of how the markets opened this morning. Are we looking at 18 Rand against the dollar in the term?
Good morning to you. Yes, it's possible, but yes, the markets managed to open up slightly, and as we have seen following what is happening with the European markets, and more importantly, we just got that the US and the Asian markets were also up marginally. So I think the markets are trying to dust off all that sell-off that we've seen on Tuesday, but is very cautious going forward. I guess we are in no man's land. Good news are bad news, and bad news are now good news for the markets.
And Stats SA has released the number of civil cases for debt this morning. Help us perhaps make sense of those numbers and why this data matters.
The situation gets to worsen, and I guess it was expected. Remember, consumers are under severe pressure from high unemployment, high inflation, and high interest rates. And more importantly, for you to get summons, it's a process that happens over a period. So meaning you don't get into trouble today and you get someone the very same day. So that itself, it shows you that this is something that has been building up. If you look at the June numbers, you'll see that there was an increase when it comes to summons that were issued. But come July, the increase is almost more than 200% compared to what we've seen in June. That itself tells you that this whole economic situation is starting to bite and consumers are really feeling the pinch. And also when you look at the judgments, we have seen that the total judgments when compared to June we've seen a decrease of almost 8%, but now we've just seen a decrease of almost just a mere 2.7%. So meaning things are worsening, and the total value when it comes to the judgments, we've just seen an increase, a decrease of almost 5.5% in June, but now we are talking an increase of 6.9%. The situation here is just getting worse, and I guess it was expected because the high cost of living is starting to make consumers feel the pinch, and hence we see these numbers which continue to be bad.
In business news, company news, Meta Investments has published its interim results for the next 6 months, ending the 30th of June of 2022. How did they fare in the period under review?
Not too bad. Remember, this is a company that manufactures, distributes, and sells your storage products and also your automotive components. And we know when it comes to the storage product market, there's high competition, especially in Europe. And also back home here, when it comes to the automotive components, we know there's been a problem when it comes to some of their manufacturers because of the floods that were realized in KZN. But now they're back into production, and hence we see that their revenue was only down 2%, their operating profit down 73%, and their headline earnings per share down a whopping 74%. And it's not surprising that the guys are not paying us any dividend. And going forward, it's going to depend what's going to be happening with the demand of vehicles, depending on the economic recessions, not just back home here, including globally.
And Anglo American has launched a 745 million euro sustainability-linked bond. What is the significance of this bond?
Very important. That itself, it tells you that companies are starting to feel the pressure coming from investors. We know that investors and the general public have been worried about global warming, about taking care of the environment. So people are expected to do business in a more responsible way. And also we've seen some serious cases coming from financial institutions saying they're not going to be funding some of these projects that will be making or affecting negatively our climate. So the guys had to do that. 745 million euros. The duration of the bond is 10 years, and the coupon rate here you are talking 4.75%. So basically, there are some KPIs when related to the environment that needs to be adhered to. If they don't, then it means bondholders will get higher coupon or final coupon payment. And some of them is that they have to make sure that they reduce the greenhouse gas emissions by 30% come 2030, and that is compared to what happened in 2016. They also have to reduce the abstraction of fresh water, especially in water-scarce areas, by 50% by 2030. And also they have to support almost 5 off-site jobs for every 1 on-site job by 2030. If they don't do that, then unfortunately they have to pay more. That's the penalty that the guys are prepared to take.
Very well. Let's leave it there for now. The very latest in the world of business, Makwe Masilela.